Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Monday, November 7th, 2022. Let's jump into the charts. Where to begin? I'm going to start with this one first, just as sort of a big picture reminder that this descending two-thirds speed line still remains a valid line study. It will become invalid if we break today the 134.37 low from early October. We dropped to within a tick of it last Friday. But as long as this remains the low from early October, this descending two-thirds speed line, of which it's based in part, remains valid as our ceiling through November, and below which the market remains susceptible to testing 124.70 long-term support. And when I say susceptible, I'm talking in particular of 156.27. 124.70 actually became indicated as a clear target on Thursday of last week when we gapped and settled below this rising near-term two-thirds speed line that is presently at 146.32. So you could also say that continued settlements below this narrowing zone of meaningful resistance between 146.32 and 156.27 maintains a 124.70 2 to 3 week objective now. So that is the kind of the big picture. Now, I'll stay on this chart because there's a lot to be gleaned here. We've got 134.37 as our downward pivot point for the day. That is nothing more, as I say, than the early October low. And 142.67 is our upward pivot point. In other words, last Friday's high. It is a bit of a gap area too. So I think if we push through 142.67, the 146.32 rising two-thirds speed line becomes an intraday objective where we can top out for the week as being a weekly resistance area, and below which a 2 to 3 week downside objective remains at 124.70. Now, if we were to close above 146.32, and I think that's a long shot today, but if so, then we should tomorrow, Wednesday at the latest, test this 156.27 descending two-thirds speed line where we can top out through November, and as I say, below which the 124.70 area is calling the market to the downside. If we were to close above 156.27, and I might as well mention that, where do I have that shown here? Here we are. If we were to close in the coming week or two back above the 156.27 descending two-thirds speed line, then we have a 3 to 5 week buy signal into the upper 170s. The 179.26 channel top becomes a 3 to 5 week target. We are a long way from that right now. In fact, because we remain heavy below 146.32, and I've got 138.20 here as just a minor point. It is the low settlement price so far. We closed at 138.38 last Friday, just off that mark. So I'm just still throwing it in there as a tradable level for aggressive day traders. But 134.37, I might as well show that here again on this chart here. 134.37, the October low. If we break it, we could actually test 128.15 intraday. Now, it's impossible to, I could put everything on one single chart, but it just becomes, it looks like a big mess. So just hold the thought that breaking 124.37 does indicate 128.15 intraday. 128.15 is this descending channel bottom that over the next week and a half converges entirely with 124.70. So breaking 134.37, we could test 128.15 on an intraday basis. 128.15, the start of a narrowing zone down to 124.58, able to absorb selling through November and even the rest of the year. And as it pertains to 124.70, I have 124.58 because that is a weekly chart level. As it pertains to the 124 handle support, it is the start of a zone of long-term support down to 117.01 that you can see here. This is a weekly chart, and I've been mentioning this now over the last week or two with regard to the Apple report. 124.58 you see here is the start of a narrowing zone of long-term support down to 117.01. 117.01 is a rising two-thirds speed line that is projected off the March 2020 COVID low. And it all comes together here over the next few months. It is an area that can absorb selling not only through Q1, but possibly through all of 2023. So this is going to be prime bottom-picking territory, and it may actually be in reach this week below 146.32. I'm trying to think if there's anything else I need to say. I think I've already said that if we push through 142.67, 146.32 is in reach today. There's not a whole lot else to say here. I'm on camera. This will be an indefinite part now of the Daily Apple report. Please forgive the messy hair. This is the last time I'll mention anything about my hair. But I do want to finish off with this. The triple Q, just a reminder, this is a weekly chart for the triple Q, the NASDAQ 100 ETF. It is our ceiling, the 293.14 to 296.73 area. And this is a significant milestone for the triple Q to close above if it can. We've got a good low through the balance of the year and through Q1. I would expect 3 to 5 months bullish continuation then into the 350s. And because Apple is such an integral part of this index, it needs to be mentioned that this index remains heavy through the rest of the year below the 290s. Want to mention that. And also the SPY, or the S&P 500 Spider ETF, it needs to close this week above 385.02. That is a descending 1/3 speed line projected off that January all-time high. And we, a couple of weeks ago, tested it. We did not close above it. It looks like we might have, but we didn't. It was at 389.34 2 weeks ago, and we closed that week at 389.04. And we pushed through it a bit last week, but we came off. So, the SPY, of which Apple is also a part, or the S&P 500, needs to close this week, Friday, above 385.02 for it to indicate longer-term bullish continuation. Even if the SPY does get that settlement, I do need to emphasize that the triple Q may not yet close above the 290s resistance. And, until that's a fact, as long as the triple Q holds below this area, it remains heavy into Q1 of next year. That's all I'm going to say for Monday's Daily Apple Report. I'll be back tomorrow with Tuesdays. Please click like and subscribe each and every time you watch the Daily Apple Report. I appreciate you watching this, and I'll be back tomorrow with another edition of the Daily Apple Report.